Now, Anheuser Busch Inbev is, of course, the world's largest brewing company with brands like Budweiser, Corona, Castle, Stella Artois and Beck.
Yeah, now remember, these are the Brazilians, right? The 3G group, they came to the fore, George Lehman at the helm. They've funded a very expensive debt-fueled acquisition of the world's largest beer group. And now it's all about trying to turn a profit with this Leviathan.
Market cap here is $196.7 billion, a PE ratio of 59.5, and a dividend yield of 3.4%. Let's have a look at that share price graph.
So it took a bit of a plummet after the deal closed, because the deal closed in a slightly ungainly way, requiring a bit of an extra top-up, and then some stories about having hedged the currency badly with Brexit. The results looked a little bit soft, but since then it's had a bit of a resurgence.
Resurgence, anything to write home about?
There's a little bit of recovery. I think, as Paul said, if you look at their last reported numbers, they were down, certainly their headline earnings per share down about 20%. But the growth is going to start coming through. They saw some of the most common or popular brands like Castle. I think everywhere in Africa you see Castle, one of the biggest sponsors of sports. So certainly I think there is opportunity there, but it's looking a little bit stretched at a PE of about 59. It's a little bit there, but it gives a good dividend yield actually. If you were to compare to some of these big stocks, 3% dividend yield is quite a reasonable average.
Well, Paul, we know a high dividend yield doesn't scare you off in the slightest. I'm not a high dividend yield, sorry, a high PE.
Yeah, I think that is a transitional number. Clearly that does reflect the sort of aftermath of the deal.
Yes.
So the global beast now has a lot of debt, because they had to fund like $100 billion worth of debt, although that was obtained at a very low level. They had to offset and sell a whole lot of assets. Remember the Chinese business Snow, they were sorry to lose. Some of the Eastern European stuff, they were sorry to lose. They sold that to Asahi. Corona, and not Corona, what's it, the Italian brand, Peroni, that had to go. So Grolsch had to go.
Today.
So now, and then in the US, they had to sell the Miller brands as well, because they were regarded as being too market dominant with Budweiser. They really need Brazil to come out of its trough, because Brazil
and
is
that
sort
could
of
be that could take some time.
Well, because Brazil's economy has been in deep recession. They've had all this political drama. Commodity prices have been a bit soft.
Not
so
unlike South Africa.
Well, I thought you said they need Brazil purely because Brazilians are known for good parties. So
they are,
man.
See, I've been in Brazil in December.
Yeah.
I've never seen so much beer being drunk. A lot of beer, like on the streets everywhere. Even the taxi drivers were drinking beer like it was cool drink.
Well, that's a bit concerning.
Yeah,
anyway, let's move on from the beer drinking in Brazil and call this one hot or not.
I think I'm going to miss this one. I won't say hot. I think you just need to look at how they're going to restructure the debt, as Paul said. Certainly there is recovery from a share price perspective after the deal, but certainly it's still a big global
So not
play,
hot,
not
Joseph,
hot,
in your opinion. Paul?
Look, the Africa business is very important to them, and we know that that story is sort of mixed. We hear, though, from anecdotal evidence that the Brazilian cost cutters have been hard at work. So I'm going to tip it hot. I just think that
that's a surprise.
It's kind of come out of the worst, and it's beginning to show a little value. So I'm going to go hot on that
AB Inbev, hot on not AB Inbev.
AB Inbev.
AB
That's the
Inbev.
one.
I'm already in holiday mode. I may have drugged the bottle of champagne just by osmosis, I think.